Well, good evening, all. Ira Epstein with your Metal Market Wrap-Up, and this wrap-up is for the evening as we're here now on the 6th of March, 2024, time 5:55 p.m. Central Time. Well, today was all about jobs. So we saw the JOLTS data. We still have about 8.8, 8.9 million jobs being offered. We saw the ADP number. They had 140,000 new jobs. In the morning, we're going to get the Challenger Gray numbers. On Friday, we're going to get the U.S. jobs report. But the event of the day was listening to Fed Chair Powell. And Fed Chair Powell made it very, very clear that the Fed is looking to cut rates when the data is right. When asked, does he think there'll be a rate cut this year, he said without a surprise, he would expect that. That's as far as you can go. Of course, in the House, you have all the politics coming in. The Republicans doing one thing, the Democrats another. It's too tight. You're going to get tomorrow Elizabeth Warren drilling in the Senate, the Fed chair, so you know that's going to be contentious. So pay attention. You will see some fireworks there most likely. When we take a look at energy prices, they've been sitting here near $80 to $83 in the Brent, about $79 in the crude. They're doing okay at this point in time. Now, we did hear today from the head of China's central bank. As you know, the National Party Congress is going on, and he did say that if the economy needed it, one of the weapons that the bank does have available is lowering the reserve requirement. With that, you saw the Aussie dollar, because it's so sensitive on commodity shipments, it took off to the upside because that would spur demand out of China, and that's one of their large clients. You're back over the 6,700 level in the Japanese yen. The dollar was down another 40 points, and we had a rally in part because gold and other markets are sensitive to those kind of positive statements for it. You can see the gold market is up $59 this week, up nearly 3%. The market, as I said, you're at a point where you've been up so much that for no reason at all other than it needs to give you a correction, you could see pullbacks in this market. It's on a stilt. This is called a breakout of this trading range. And if you look at the Bollinger Band, you're now fighting it at 2159.70 to get under that number. You've had 4 settlements in a row over it. There's no magic here, but if you go back and you count how many times in a row in the futures markets do you close over or under a Bollinger Band on the lead contract? I'm not interested far back months. 5 often is about the number. And the fact that you've done 4 is often not a sign of weakness. Hitting the band once or twice and then pulling back is common. But getting over it and staying over it that much, that's not the common thing. It's often the signs of a breakout. I explained that on day 2 here, and you've certainly carried further up. On breaks in the market, I would expect to see buying. You're taking the Bollinger Bands, making them embed, which tells me on the pullbacks in the market, do look for the buyers to show up. When you look at the gold-silver ratio, it's all over the place. It's one day over it, the next day under it. I'm going to be leaving the March silver now, and I'll start putting on the May versus the April. I'll probably get to that this week, the end of the week. In the May silver, you're up at a big resistance area. You're up at the Bollinger Band, the 200-day average. You haven't been at that 200-day average since the beginning of the year. It is a resistance point. It is not a bear point. It is a resistance point. The trend is up unless and until the market takes out in the silver 2378.5. And if it does that, probably goes into a bit of consolidation, could even pull back to wherever that 18-day average is. Right here, do I think I'm seeing new trade coming in when you're overbought? I don't think so. You can get it, but I'm not seeing it. In the copper market, this is your consolidation phase. You can see that in the momentum right here. And if you take a look at what's going on, the overall trend is up. If you take out today's low, you have an outside day up, it would mean you're probably going right back to challenge the 381 to the 380.90 area, right in that 100-day and 18-day average of close. But I don't see anything on that chart that would just turn the chart suddenly bearish. Could it happen? Of course, but I don't see that. In the platinum, Again, you heard how many mines are closing. I had mentioned that early in the week. It formed the bottom off that news here. Now you're coming up to resistance areas that come into the Bollinger Band top, 921.30 to the 100-day average. But there should be support at that 897.80 level. And what's helped the metal markets is the fact that for the first time, if you think about it, since mid-February, the market's gotten underneath the 100-day average, the Bollinger Band, and it's challenging the 200-day average. We haven't seen that. So this is the first attempt at a market that's trying to come out of this sideways action. It was more or less caught in here, and if it lets go to the downside, it should add some fuel to the fire for the commodities as a whole. Now, tomorrow what you're going to get is, again, you have Fed Chair Powell, but he'll be in front of the Senate. You get Challenger Group coming out with their update of their monthly estimate of planned U.S. employer job cuts. The January trade balance comes out at 7:30. Fourth quarter revised non-farm productivity and numbers will come out at 7:30. That's really old data. I don't see that as a market mover one way or the other. Energy analysts, they're going to look for the EIA withdrawal. They're only looking for 47 billion cubic feet. The weather has been so good that there's just not a lot of demand on the energy. And we will hear Cleveland Fed President Mester make an address on Thursday, but who's going to be on screen? It'll be the Fed Chair Powell. Sometimes the Senate doesn't get the full TV coverage. It's the second day of his coverage. That's why. Today was nonstop. All you saw was that going on. Now, I'll be talking about this and a heck of a lot more in the mornings. In the mornings, I cover my morning spider ETF video, my futures video, and frankly, I've been getting more trades out of the spiders that have been working than I am out of the futures right now. I wish I could tell you the reason why. I can't. It all flips around from time to time, but the chart patterns there have been pretty interesting. You can see how the market's working on everything through there. I cover and rotate on both. Especially on the spider ETF, I rotate a lot. In futures, there's only 40 futures markets, so I cover them as best as I can, just about all of the different sections, the grain markets, the currency markets, the softs, the interest rates, the energies. So if you'd like to take a look at these, just go to iraepstein.com. Under the word research, that's the place to look. I'm Ira. You have yourself a good evening.